Welcome back to Global Mantra. I'm still in conversation with Mark Artherton, Head of Emerging Markets at Aviva Investors. Mark, a theme in a country which is perhaps more predominant, and you like to play that theme.
Well, I think we've got, our approach is I would categorize it as a 5-step approach, where 2 of the steps are top-down, and 3 of the steps are bottom-up. So the 2 of the steps that we look at, one is macro. Macro is still very, very important from a banking sector perspective, where interest rates are going, from a currency perspective, etc. So domestic macro policy is very important, and so we look at that very, very closely. Then we look at themes, which is more the micro step down, which, for example, an example of a theme is iPad disruption of the tech chain in Asia, and so those kind of things. Within that, there's a bit of overlap between themes and macro. For example, consumer. If we like a local consumer, then we'll follow that theme. Then on the bottom up, we're looking at 3 things. One is special situations, mergers, acquisitions, spin-offs. One is where there's informational issues, and that's where small cap comes in, and we have a small cap product there that tries to capture this, and it's a very specific way of looking at stocks because of the lack of information. And then finally, we look at things from a sort of a market neglect perspective, which is more quantitatively driven.
Contrarian?
Quantitatively.
Okay.
So, for example, looking at stocks which are doing the same yesterday, today, and tomorrow, so the market kind of loses interest every now and again, and you can pick out divergences in valuations, and so we're very careful to try and pick those up as well.
Okay, you've also mentioned, since we were talking about consumption-oriented stories, you mentioned that the emerging middle class is not just about consumption, and we've already seen a big rally in these stocks. Does that mean that, as a sector, that's not what you favor? I mean, what's the broad call with that statement? Well,
I think it's very easy to sit there and say a growing middle class, so what should we buy? Luxury goods and department stores. And obviously, as a first step, that's very good and makes sense, and you can make a lot of money out of that.
Exactly.
But the next steps after that is trying to engage the sort of the what other implications does a growing middle class have? And one of the key areas which my small cap manager has been pulling out is healthcare. Very clearly, as you get a growth in the middle class, you get a growing requirement for healthcare, and for more than just your basic healthcare. They want Western standards of healthcare. And so trying to invest in those kind of areas is a way to access the middle class consumer within emerging markets as well. And so, for example, dental insurance plans, there's a number of stocks that are related to that, and we've invested fairly successfully in those kind of areas.
Companies which are setting up hospitals or are related to that business, is that also your focus point?
I think where we can get it, yes, it is. It's the healthcare setups in countries vary by countries and the way you can access that. But yes, very clearly, if there are investments in hospital areas with a good regulatory system, a good insurance-led system, then we prefer those kind of investments.
But why are you scouting for opportunities in the small cap space essentially there? Is there a value trigger there that perhaps these businesses, given the potential of growth, could scale up to becoming mid caps, large caps down the line? Or it's just the fact that some of these larger names are not very attractively priced?
Well, I think it's a through time issue. So the major reason we looked at small cap around about 3 years ago was this, on the back of this liquidity story. Growing liquidity within emerging markets makes it a viable asset class. Also, if you look at the large cap asset class, it's very well covered. I mean, and so the informational inefficiencies are not really there in the large cap space, or not there as much as they are in the small cap space. And in addition, one of the positive things we like about the small cap space is it's much less skewed to materials, to oil. It's much more skewed to domestic-oriented factors, and we like that.
But there's a high beta element there as well, right?
There is. I mean, with any small cap investment, you're going to get this beta impact. And for example, last year, I think small cap outperformed large cap by in excess of 20%, and that was in an up market. And so you definitely got that beta factor. But what we're trying to do is look through those short-term factors and say that this is an area that you should be allocated to long-term, because these, as you've pointed out, are the larger companies of the future. And if you can be successful with that kind of stock selection ability, then there's a natural migration through the small cap to the mid cap into the large cap, and you can hold companies for a long, long time.
So where are you scouting healthcare opportunities in EMs?
Healthcare opportunities in Latin America, across Asia. In EMEA, it's much more difficult to find those kind of opportunities.
All right, we'll take a short break on that. Now, when we come back, we'll talk to Mark about India and where it stands in the EM story.
If you want to have that extra growth, that extra impetus, where's India going to be in 5-10 years' time, then the mid-cap space is very definitely an area you should focus on. But I think on Reliance, it's always been more the relative valuations. So I've tried to step Reliance outside of the India story and put it in the context of the Russian oils, of Sasol in South Africa. And it's always been that relative valuation argument that's kept us away from that.